Alright, what's up? How we doing? Welcome on in, man. Let's get to it. Alright. So, I'm looking at this. And I'm thinking, yeah, probably a big trading range, right? So let's keep an eye on that. The movement isn't half bad so far, aside from between 6 and 14, and now 17-ish, 18, and bar 30. There's a 5-minute NQ, ATR 38. ATR is a little bit lower than we've been used to here in the recent past. Let's keep an eye on that. And let's get to it. We'll try to find some core RAM stuff, maybe do some scalping along the way. What do you say? Let's do it. By the way, you see 17. You know, this is where nuance comes into play. You look at 17, see how it closed right inside the wick low of 3? Well, a lot of people ignore that. And all they see is 15, 16, 17. They don't even consider this. But people that have been trading RAM for a while, this is all they're looking at. This is the trigger, but this here is the entire context. It's the entire framing. So if you're gonna hit this, you gotta understand, you're putting on the entire bar 17 of risk right here. You better be going for a higher probability scalp. It's been a range market lately, right? So it's like, well, this is probably reasonably probable as you're coming into the close of 17. So can you really expect this stop, or the stop hunt below the wick low of 3, right, to break and go 100 points? Could it happen? Sure. Is it a reasonable expectation in the current market environment? I would argue no, not really. Can you still put it on? Sure. If you want to go for a higher probability, low reward to risk scalp, Sure, you can put it on, but there's nuance here. Okay, 3 minutes out here till the close of bar 31. See what 31 does here. $90 seconds out. All right, if 31 can close nice and clean beneath the wick low of 30, then I'll have to short it. I don't want it to grow too much. All right, ATR 38, 18 seconds out. I've got that copier engaged. There's a little guy here. Let's see if I gotta put it on. Play sim, see if the bears want to take it. Yeah, we've got a range here. I'll just scalp it into the low of the range. If the bears want it. And they will take it. Stop goes above 31 here. All right, ATR, by the way, is sitting 36. It's a 5-minute NQ. All right, rolling over into 33. This here in case we take out that low a day. Well, come on now, Bears. What, that's all you got? I didn't need too much more. Well, they took me, what, maybe 18 points in the money? Which at the time would have been fine for a half ATR scalp. Looking for more than that, man. Just a bit more than that. ATR is coming down a little bit. We're down to 33 from 36. Oh, baby, give me that fill. Better than 2/3 of an ATR. All right, one trade in. What did I make on that? I have a P&L here from last night. Let me look back at the footage. $2,300. Yeah, I think that's about right. All right, keep it moving here. Yeah, so that trade, that was just more of a scalp than anything, but it wasn't a half ATR scalp because the risk didn't really make sense for that. I had to get at least 2/3. So I shorted the break of the wick low of 31 with a stop limit sell. 31 closed beneath the wick low of 30. I risked the wick high plus a point of 31. Look to fill this range. Now we're getting that plus a tad. Well, interesting bar here now on 34. Let's see. Look at this retracement all the way back up into the trading range. And hey, big sideways range here. Bulls taking it right back in. These breakout attempts, they tend to fail, don't they? Now, I'm curious if we turn this back into a bearish move. That's a nice big break to the bear side. Failing for now. Let's see if that hangs on. Yeah, I see a lot of you guys talking about 15. 15 is one of those bars that when you have 6 through 14, 15 is the kind of bar you're hoping for. Shakes up the day a bit. Javaz, my man, good to have you, brother. All right, well, what's next? What's next? We got lots of work to do here. Yeah, that's a tough failure out of 34. Couldn't even close beneath its midpoint, which is kind of embarrassing for the Bears, I gotta be honest. Now, if they take out the wick low of 34, then I gotta see if they can close it beneath the wick low of 34. And if they can, for me, that's not yet a short, though it makes me start thinking about shorts. But you gotta remember, 80% of those breakout attempts in trading ranges are gonna eventually fail. Bears taking another run at it. Let's see what they got at the wick low of 24. I'm sorry, 34. 24,000. $220 left here on bar 35. Testing the wick low of 34. Testing 24,000. Man, I'll take 24,000 over 25,000 any day. We love it. Get me away from 25. Part that sucks is we're gonna have to revisit it at some point if the market's ever gonna go up again. Hopefully we'll just blow right through it and leave it behind. But who knows, man? We'll worry about that when we come to it. William, what's up, big dog? How we doing? All right, 70 seconds out. Let's see what the bar 35 has got at the wick low of 34. Again, 34, ugly bar. Bears couldn't even close it beneath the midpoint, but 35 is trying to make up for it here. By the way, when I say beneath the midpoint, I don't want to use too much jargon, but you know we gotta keep it moving. The midpoint, just the midpoint of the bar. You know, in a lot of ways, you could almost argue the Bulls won bar 34. Obviously, it's a bare body, but I mean, look at that failure. There's something else. All right, 35. 35, not even able to close beneath its midpoint either. 36, man, let's watch. New low a day here on bar 36. Not all that enthusiastic on the break, huh? Okay, now 36 would be the first bar closing outside of this. Well, it depends where you want to look at the range. You could argue 35, though it's not like 35 was a pretty bargain, closing just above its midpoint. 34 even worse. Let's see how 36 closes. ATR is 40, which means the range on this bar isn't so crazy. See how it closes up. Minute 42 out. Coming right in at 24,000, by the way. Now remember, 24,000, it's not an S tier level, though it is A tier. Coming right into it. Now for me, I'm actually going to take a stab here if it closes reasonably. You'll say, well, 24,000. Yeah, I don't care about 24,000. If the bears want to take out, if they take out my stop limit sell, this is all already thought of ahead of time. What are they also doing? Taking out 24. Right, so let's see if they want it. And then I'll just risk 36. Alright, they'll take it. They'll test 24. Little pullback. Likely to happen. And I'll put that there. Alright, let's see what they got. Bears take us into the 23s, baby. We don't care about 24K. Little hesitation. Take it through, baby. Halfway through bar 37 here, by the way. ATR sitting about 40. Little hesitation here around 24. What have they had me so far? At best, 22-ish. A little shy of 22 points in the money. Yeah, that's not enough. HR sitting 37.38. 5-minute NQ chart. Alright, Bears, hey, we don't care about 24,000, baby. Take that thing down through. I want to see tears out of the bulls. Tears. You remember I said that once and someone got all offended? Like, what game do you think we're playing here, homeboy? Alright, Bear, it's time to fade it, baby. ATR 38. ATR down to 35. So now the question becomes, do I target a single ATR or one R? And I gotta be honest with you, I think I'm probably gonna target a full R. But I'd like to see volatility at least maintain, quit dropping. Alright, bulls. Say it's about time to give up. Big dogs. Well, sitting right about break even here on the trade. Kind of funny, my average ended up being 24 on the dot. Alright, man, somebody. Take it down through now, Bears. Target for me here, I'm thinking a full R. Ooh. Let's put this where it needs to be. We are kind of jerky here. All right, Bear. Let's take out that wick low of 40. 40 closing inside this little mini trading range between 37 and 40. It's not a half bad bear body. Not great. Man, it ain't over till it's booked. That goes for red or green. It ain't over till it's booked. Price sucking back toward break even here. All right, Bears, do it to them. Yep, I'm sitting short. This is a pure RAM probability play. You'll notice I'm targeting a single ATR, which makes reward to risk a very easy factor, which leaves what? What factor does that leave? No one knows the answer? Really? How long we been at this, man? Come on now. Probability, that's right. So if it's 1-to-1, which a lot of my trades, most of my trades aren't exactly 1-to-1, as you guys know. This one happens to be 1-to-1, which makes it a very clean equation mathematically. Which means, what does probability have to be for it to have any kind of edge? Well, it has to be somewhere over probably 52% to cover commissions and fees. Okay, I know the probability after bar 36 is somewhere between 60 and 70%, depending on the nuance and context, that it hits my target before it hits my stop. When I say 60 to 70%, people hear 100. No, I fucking said 60 to 70. Okay, if I gave you a weighted coin that had a 65% chance of landing on heads, does that mean it can't land on tails? Of course not. But I'll bet on heads every fucking time. It's 50 micros today. Yeah, that's my position size. It's right in the upper right. And that's copy traded across a bunch of accounts. All right, Bears, go on now. Man, if you haven't yet, hit like on the stream. I appreciate you doing so. Or dislike, big dog, whatever you like. Where'd you go, Bears? Alright, I got 41, 42. We'll watch 43. 4 minutes out yet. Lots of time. Alright, Bears, what you got? Alright, Bears, not bad. Whole lot more work to do. See if they can get it done for me here. There's the rollover into the open of bar 44. What's up on 44? We got a whole bunch of sideways action here, don't we? Bears, big dogs, come on now. I said fade this thing. Do it to him. All right, let's run a poll. What do you guys think? What do you guys think? Am I good or am I cooked or what's up? Bar 44, minute 53 out here. I most certainly do not win if I close it now. Sure, I book up $1,500 and then I lose long term. I'm interested in profitability, not winning this trade. Too many people care about right now at the expense of their family's future. Even if you had an edge, man, you're handing it off on a silver platter. Every time you're like, I'm in the green, man. Everyone says green is green. Always take green. Yeah, how's that going for them? You have to squeeze your target out of the winners. Whatever that target was intended to be upon entry. A very honest, not exaggerating, a very honest comparison to when people say, you know, you should just book it, you're green. Take the money, bro. Well, it's not to my target yet. An honest comparison is when if someone wins one hand of blackjack, that's like them saying they figured out how to beat the casino. No, you didn't. You won one hand of blackjack. Taking profits early will fucking bury you. I promise. I'm not saying you have to let it run 200 points in a range day. That's not what I'm saying. I'm saying let it, manage bar by bar as necessary. But if you had a target that you intended to shoot for upon entry, you got to squeeze the target out unless you have to manage it bar by bar for some reason, which is a very simple set of rules. What about taking partials? Look, partials can make sense if you are scaling in, scaling out. I'm talking like a core RAM trade, one entry, one exit. When a trade, this maybe isn't the best example, but like, remember yesterday's stop hunt? That worked super quickly. It put us like 40-something points in the money in seconds. That's a good example. If you take it at 12 points in the money because you're scared, as that trade is going in your favor, the edge on it expands very quickly and short-lived, but it expands. So if you take it early, you're taking it off when the edge is technically the best. As you get a fill on like a stop limit sell below a nice bear close and it shoots lower, it's a split-second decision, but for me, I hold off. My initial target on that trade was 1 ATR, so I waited till I got 1 ATR and then I pulled it. What's your level to sell? Well, I'm in a short, so you mean buy back? My risk is managed above the wick high plus a point of bar 36. That's always first. And the target is 1R, so 23,949. This is purely a core RAM probability play, that's it. The math on this trade is very simple. Just gotta put it on and accept the outcome, move on. Alright, there's the open to bar 46. Big wick down there out of the bears. See what they got. Kind of a sideways range here. Can't expect the world out of them immediately. Let the bears do their thing. Well, Bears got close. Within 5 or 6 points. No cigar yet. Why not move stop to break even? Because I haven't had a bar-by-bar management decision to do so yet. For me, and for a lot of traders trading RAM, moving stop to break even only makes sense if you get a supporting entry while you're already in the trade. So if I had another short entry where I'm like, yeah, if I were flat, I would short that. But I'm already short. Then I would move my stop 1 point above the new signal bar. Okay, arbitrarily moving a stop loss, everyone's tried it. I tried it for a long time. I tried trailing stop losses. I tried arbitrarily moving above and below bars on core swing trades. Like this is kind of an intraday swing, right? Let's have a scalp. And you know what? It's scared. It's scared because traders come in and you don't want to lose money on this trade. I get it. You don't want to lose money. Well, I don't want to fucking lose money long term. I don't give a shit about this trade. That's the difference. So if I move my stop to break even, what do? I make myself feel really fuzzy inside. Oh, it's a free trade. No, it's not. I had the risk on initially. It's not. There's no such thing as a free trade. And then what does it do? It greatly decreases the probability. Okay? Moving stop to break even forgets about the other half of the equation of having edge, which is probability. All it accounts for is emotion and hindsight reward to risk, right? Which is emotion. You care too much about each individual trade. Anyone who's thinking this way. Now, again, there are reasons. You guys have seen me move stops, but I have a bar-by-bar reason to do so, which I have not had yet. All right, Bears, let's actually do it to him this time, huh? There we go. Full R out there. Let the copier flatten here. 1 second. There it is. We're flat. All right. Moving on. $5,200 ish. Which, including the small P&L I had earlier, leaves me 9,200 so far on the session. Let's keep pushing. right, minute 55 out here. Let's see. Now looking at this with a brand new set of eyes. Bit of a wick on 45, 46, 47. You know, it's not the worst in the world. But I start looking at it like this, potentially. And now you've got this expansion, so you get 47. If 47 can close nice and clean, could you short it? Sure. Is the probability great? Not as good as it would be on a repeat on 48. So I'm looking for a couple of bear bodies. Get me away from this sideways trade range that we just dealt with for a long time. And we'll see what's up. How you guys doing today? Healthy green, solid green, beautifully. Love it. We love to see it. So now, to drive my point home, you guys remember, I don't know if you were here at this time, but remember during that trade, it was sitting, I don't know, like break even. I said, look, I happen to be targeting 1R on this trade. That's not the case for most trades. That one, that happened to be the case. So if reward to risk is 1-to-1, what's the other factor of the equation? It's probability, not profitability. It's probability that it hits target before it hits stop. Right now, I know selling beneath the wick low of 36 is somewhere between 60 to 70% at 1-to-1 that it hits the target before it hits stop, which is above the wick high of 36, 1 point above. Now, that trade happened to land on that side of the weighted coin. It could have gone the other way too. And let's average it out. The 35% chance that it stops me out. So what? You move on with your life and you take that same trade 100 times and oh, whoops, the math worked. Simplify. Now, not every trade's gonna be that simple of an equation, but that's a good example of one. Because it locks down the reward to risk side. Now you gotta understand that most trades, both of them are gonna be moving. So you throw them in the bin, you look, does it float? Kind of thing. If it floats, oh, okay, it has edge, great. Now if you're a beginner, that probably sounds really fucking stupid. If you've been trading for any short period of time, you're like, yeah, I know what you mean. All right, 325 out here from the close of bar 48. Keep an eye out here. But I'll tell you what, I will be back in just a couple of minutes. Don't you go anywhere, big dog. What's up? Welcome on back. Let's get back to it, man. Did I get anybody, by the way? All right. So we've got a little bit of bear insecurity here. You get 47, then 48, which was the bar we're looking at closing as a nice small bull body. Some range-like behavior. With a soft bear channel bias here. So I got to be very careful here getting long up out of the hole, right? Because context is clearly soft bear channel with a tendency to enter little sideways single bar trading ranges. So for me to get long, honestly, I'd have to see 2 to 3, probably 3, maybe 4, based on the ATR, just the expected size of them. Bull bodies with one closing nice and clean above, my eye is on the wick high of 43. Until then, I'm not thinking anything to the long side. Question here, was bar 47 a Rams setup? It could be. It was a low quality one. We talked about 47 here on stream. I wanted to wait for 48 because the soft bear channel and the single bar range between 37 and 44. 45 was kind of an insecure close. You could technically argue that it did close outside the range, but there was wick and it was insecure. And then you get 46, obviously small bull body. So 47 is now like the first legitimate bear body to close outside of a small, low volatility, ATR's 30, single bar trading range. I wanted 48, which of course we didn't get, which was not unexpected. This, you know, people oversimplify. RAM is very simple. But this is still trading. There's a lot of nuance involved and a lot of discretion involved. You cannot oversimplify this shit. So when people they're like, hey, so I just look for this and then I take profit here, right? And I just do that every day forever. It's like, come on, dude, accept the fact that this is going to be nuanced. There's going to be discretion involved. I made RAM so that I'm confused as little as possible. It is relatively simple, but there's nuance involved, big dog. You gotta accept that. Yeah, man, I hope it works out for you. And by the way, it doesn't mean taking 47 was wrong. That's just a very early trade, which I talk about the early trades in the tomb all the time with my guys. It doesn't make it wrong, it just makes the math different. Oh, I'm sorry, you're right, we've got some new people here. RAM is the Roensch action method. It's just what I developed for myself to trade price action. One sec. All right, 35 seconds out here from the close of Big Bar 50. Let's see. All right, there's the open bar 51. Let's see what we get. Well, ATR is now below 30, man. We're sitting at 29 here on the ATR on the 5-minute NQ. We got ourselves a quite a soft bear channel. Low volatility. Gotta be careful betting on breakouts here. Meaning getting short in the lower third of it. Now, volatility, if ATR was like 70, and this was a wider soft bear channel, man, it closed on 51, it closed beneath 48, I'll short it. Context is all wrong. Low volatility, soft bear channel, it's tight. I want to be convinced. Question, do you ever dollar cost average or just YOLO? YOLO, no. That doesn't mean you don't put on risk. Putting on risk is very different than just full port YOLOing a trade. Dollar cost averaging, sure. If I'm scalping in a personal account in a range environment. The problem with dollar cost averaging in props is the following. You can't really start small enough to do it as effectively as you should be able to, because you only have so much room in a prop. Like, you're capped as far as how big you can realistically trade, whereas in a personal account, the only cap is how much capital do you have. So you make little adjustments. It's fine. It's not a big deal. The core RAM stuff is for me, it's the highest edge anyway. How do I trade a reversal? Well, I talked about that, right? The wick high of 43 is what I had my eye on. 48, 49. I was saying I need at least 3, if not 4 consecutive bull bodies with one closing clean above the wick high of 43. Then I would put it on and risk the signal bar minus a point. Until then, context soft bear channel. All right, good close out of 51. Now I'll watch 52. And volatility's low. If volatility were higher, I would short the close of 51, but we're below 30 on the ATR. Low volatility, things tend to range a bit harder. Worked out for you, Nathan? Good. Love to see it, big dog. Got my eye on 52 here. 3 minutes, 10 seconds out. 5-minute NQ chart. There you go, 52. Let's see what these bears got. Still a high probability the bulls take it back up. At least on this bar. It doesn't mean I'm going to get long, by the way. I'm not typically buying the lower third of the soft bear channel that looks like this. I got run over one too many times in my early years doing that. You guys want to know a really easy way to stop losing so much? You don't have the nuance of the screen time or the methodology yet, but let me explain something to you that'll help you a lot. It helped me a lot. When you see this, it's a big soft bear channel, low volatility, but it's a big soft bear channel that's trying to get more aggressive, right? Until you are actually, like we just talked about reversal continuation. Remember, wick high of 43, 3 to 4 consecutive bodies, closing clean, right? Until that happens, you need to try to be less smart. You're probably reasonably intelligent if you're here, above the mean, okay? You need to stay dumb. You should be looking for shorts and reasonable shorts until proven otherwise. And notice how I'm being patient. The wick low of 51, I'm sorry, the close of 51, I'm like, yeah, that's great. Soft bear channel, context is wrong, volatility's low. I'll wait for 52. If you want to take limit order reversion scalps in the upper third of the soft bear channel, as long as you can find something reasonable to use to manage your risk, that's tremendous. But you're making your job really, really hard. And you're going against the probability buying this right now. Now, could it reverse and go way higher? Yep. But you're swinging for the fences. When we know that just hitting base hits, a double here and there, is what wins games. Or what I should say is wins championships. Alright, here. 10 seconds out, copy trader engaged. Go ahead and get ready. Place that guy, roll over and take it! They will. Alright, I'll go ahead and risk 52. And let's see what these bears got. Volatility pretty low here. Looking for more of a scalp here than anything. ATR 29. Nice and slow. ATR 29. About 30. There you go. Better than half an ATR is what I needed. And I'll pull it. Volatility's lower, so I'll take my scalp and move on. I don't love volatility under 30, you know? What did I make on that? 1,600? I'll take it. Let's move on. Does RAM work on overnight sessions? Yes, sir, as long as you have the understanding. Look, RAM will treat you well as long as you have the screen time and the nuance and the core methodology down. On any instrument that has volume, on any time frame during any session. Now there's nuance, right? So if I say that 80% of breakout attempts in a sideways trading range will fail during the day, eventually, that might pop to 85 to 90% during Asia. So you gotta be a little more careful, but this isn't an Asia session versus New York problem. It's a volatility thing. You can have the same environment during New York. If ATR is really, really low, you want to be maybe a little less aggressive betting on the breaks. But you can also have the nuance where volatility is low, but it's a really obvious, like, grindy bull trend. If this turns into a grindy bear trend, great. But it hasn't been so obvious all day, because look here. Big sideways range, right? When we were in that one trade, trying to go sideways for a while. This is kind of new. So 53 is actually another reasonable setup. Give that one about 15 seconds. Wouldn't have gotten to fill anyway. I'm talking too much. All right, 3 trades in, 3 winners. I'm sitting up on the session 10,860. Volatility's low, so I'm a bit more patient when volatility's low. I'll get more aggressive when it's higher, but I really got to be proven to, especially on continuation when ATR is under 30, you know? All right, guys, I'll tell you what, man. I'm going to go hit lunch. If you guys want to learn RAM, join the team, man. Best, fastest way to do it. If you respect your time, go hit it. Otherwise, you can just hang out here each day. And I think eventually maybe you'll get the gist of it, though it seems like a lot of people miss the nuance. But either way, man, whatever you want, I will see you guys tomorrow morning. Pharaoh Friday. Big dog, let's see what we get. We'll come back in the afternoon. I won't be streaming, obviously, but we'll see what the afternoon brings. All right, guys. Hope you have a good lunch. I will see you tomorrow. Stay patient. Let it come to you. 3 trades sitting up on the session 10,860. That includes a small P&L from overnight. I don't know. What did I make on stream? Maybe 9 or 10,000? Close enough. All right, guys. I'll see you soon. Bye-bye.